Hey guys, we're live and we have a special guest with us today. If you guys have been on Twitter for, lately, you guys have seen his charts around. Cebu Trade will be on here today. First off, just starting out, me and Sam. Sam, how are you, man? We haven't gotten to talk much this weekend besides Sam helping me with some technical difficulties because, yeah, I'm a coder who can't do anything else, so it's
Yeah, it
it's
was pretty
hilarious.
funny. Yesterday morning, I was just casually making my pancakes and bacon, and I get a call from Jason saying he doesn't know how to run this technology we're using on the blog. So I had to set everything down and go help him.
It's
No,
very hard, man. It's very hard for me some days, It just depends on the day. Depends on the day. Some days it's like, oh, everything's fine, and other days I'm like, I have no idea what I'm doing. And that's just kind of how life's been for a while.
you're really, really good at some things, Jason, and really bad at others.
My mother would always tell me it was selective. She'd be like, "You have a selective memory. You're selective this. You're selective that. If you hate," she's like, "You can do anything that you want to do except for things that you don't want to do. You can't even do them at all, not even half-ass." And like that was the truth. I
I think that's
completely
good
agree
advice.
with that.
Yeah.
Yeah, I completely agree with her assessment of it.
Sure.
So Sam, we've been talking about commodities and talking about gold, silver. Gold had a pullback last week. Everybody panicked. It's the end of the world. It's the end of the gold cycle. And it's the thing that went down the least in everything else. So, what are you seeing in the gold market? Are you thinking like, we're in a weak dollar cycle going forward? Do you think we're in more of a gold bull market still, or do you think gold's done? Party's over.
Yeah, no, I definitely don't think the party's over for gold. I was looking at a lot of monthly charts this weekend, and I noticed the monthly candlestick for gold was not the best looking. It's kind of a doji, if you will. So it's the market's kind of speaking some indecision into the gold market. So that's not incredibly bullish to me, but we've been talking on here just about every single week about this potential catch-up trade of copper breaking out of a massive base, and you've really been pounding the table on silver as well. So I continue to think that makes a lot of sense. Platinum and palladium as well. I noticed coming into this week, palladium was at the lower bound of a pretty well-defined trading range. And here they are this morning. Last I checked, they were ripping it like 4.5%. So they're buying support, but I need to see these charts break out. Talking to you, platinum and palladium.
Yeah, platinum and palladium have been a tough one to kind of think about lately, which is, I think people are just going to write it off. And this is what happens every cycle is you start to see silver move, you start to see gold move, and everybody goes, well, what about these guys over here? And then, they're flat for a little while. Everybody writes them off. The second nobody cares about them anymore, they usually take off. So I don't doubt that the cycle continues to work the same way. People will talk about palladium and supply and demand and all of these things, and not really understanding like the massive supply out there in most of the precious metal space. It's very psychological. So this move is going to be psychological. I think it'll happen, but right now we need to see it in silver. We need to see the silver breakout. So getting past that, you guys have heard me talk this weekend. Kevin and I did a emergency live yesterday at about 11:15 in the morning. So if you guys are on my YouTube channel, you can go to that channel, that page, check that out. To ask what's going on with these markets, what's going on with gold. He brought a bunch of great slides. So how are you doing today, man? Good to see you. Good to have you on.
Thanks for having me on, Jason.
So
Yeah,
how are
so it's
you?
definitely I'm doing pretty good. So it's definitely been an interesting few weeks in gold and commodities in general. So like I was mentioning before, this year so far equities have generally been flat, going up, down, attracting a lot of attention, but generally doing nothing. In the meantime, there have been some pretty good opportunities elsewhere, primarily in commodities and non-US equities. So every single market is driven by its own story. It's driven by its own macro fundamentals, and gold and silver is just one of those. So it's gone up a lot, and it's made a pullback, which is within expectations. And I expect it to go higher because there's a strong fundamental macroeconomic thesis that's propelling the bull market higher.
No, I love that. And so and you guys watching, give me a hand because I got a new studio. Don't have as many screens. Getting them. They'll be coming soon, but I need some help with retweeting, sharing this thing. Make sure to get it out there if you guys can. So you brought some charts, and Sam, can you bring up some of his slides starting at 1? Because I wanted to talk a little bit about go to the next one. That was one of Kevin's. So this one. So let's
Yeah.
talk about this. And so we'll just start out. We'll go through your slides. I know you have a bunch of great stuff in here. So, guys, sit tight. This is a master class. Let's talk about the gold market. Let's dig into it deep today.
All right. So at its core, my core positions tend to be trend following positions. But as you know, Jason and Sam, every trend follower tends to have the same problem, which is that in a very choppy market, you don't have a very strong trend. And without a very strong trend, you have what's called the proverbial death by 1,000 cuts, which is you take too many small stop losses, right? So that's why before looking at the market, we always have to understand what is the macroeconomic thesis that is propelling the trend higher. And if there is no thesis, then there is likely to be no sustained trend, correct? So right now, what's very interesting in the precious metals markets, if you look historically, for example, during the 2000s bull market in gold, silver, and commodities in general, retail had a very heavy participation in that rally. So I haven't shown that chart here, but generally in the 2000s, if you look at the gold ETF volumes, those spiked in the 2000s as gold was going higher. But in the bull market in the past few years in gold, you have not seen that. There has not been very strong retail participation. Now, perhaps a lot of those former gold bugs have gone towards Bitcoin, which they see as digital gold, but that's what's happened. So the question is, if you don't have a lot of retail buying in gold and silver, what's driving this market higher? Why is gold making new all-time highs? So that's the macroeconomic, macro fundamental question, and that question can be answered by this chart. So while retail has not participated heavily in the buying, central banks have. Because today we live in a world with a lot of geopolitical uncertainties, various countries going towards what's essentially an economic war. They're all trying to see who gets what of the global economic pie. And so before, if you had countries, for example, Japan or China or various EU countries, if they're buying US Treasury bonds, now they're hesitating to do so. In fact, if you look at China's Treasury bond holdings, that's going down and down and down. And that's very obvious because if you are a country like China that is on the verge of, let's say, an economic war with the US, are you really going to hold $1 trillion worth of US Treasury bonds? That's very, very dangerous to do so, right? For example, you could see that when the whole Russia-Ukraine war broke out, if your reserve is an asset that another country can confiscate, that's a liability to you. So hence what you see happening in China, as opposed to buying treasury bonds with their trade surpluses, they're now moving into these reserves that cannot be confiscated by a potential adversary. So one of the most ancient reserves, one of the most ancient holdings of all time, of course, is gold, right? So that's why you see in this chart, ever since the Russia-Ukraine war broke out, central banks have been buying a record amount of gold. Now, this is Russia, this is China, and this is many other central banks around the world. So that right there is the macro fundamental thesis for why gold is trending higher. So maybe if we can move on to the next slide. Okay, so this is a chart that looks at the gold and silver ETF flows. Now, this is not just GLD. This is the various ETFs, for example, GLD, SLV, all combined into one. And what you can see is that in recent weeks, gold has been trending upwards. And just last week, we got a massive spike in flows into gold and silver ETFs. So that's why a week ago, I was saying, yes, this is a bull market. We're definitely trending higher, but we are likely to face a short-term pullback or a consolidation, which we did get last week, simply because things have been a bit too overextended. So maybe if we can move on to the next slide. All right. So one of the options flow statistics that I look at is the value of options that were traded for each and every single market. Now, people often just look at volume. For example, you'll see people talk about, the total put call volumes, and volume is nice to look at, and so is open interest. But one of the difficulties with volume is that it doesn't take into account what types of options were traded, because different types of options have different dollar values, correct? So for example, longer dated options tend to have more time value, so they tend to be more expensive, right? So more in the money options tend to be more expensive relative to out of the money. So that's why for every single market, when I look at options flow, I'm also calculating what is the dollar value of the calls minus the puts that were traded. So what you can see is that as of a week ago, you had another large spike in the value of GLD calls minus puts that were traded. So the last 3 times this happened in the current gold bull market, all 3 times led to a pullback or at least a consolidation, a sideways consolidation, which is to say that, as of a week ago, things were a bit overextended and the pullback in the past week has been pretty much within expectations. So maybe if we can move on to the next slide. All right. So around 2.5 weeks ago, I had kind of shared this chart. I don't think I shared it on Twitter, but this is essentially the gold miners options flow index. So in my options flow index, like I was mentioning before, I don't just include the volume for the gold miners options, but I'm also looking at the dollar value. So the volume in relation to the dollar value of the options flow. So what you can see is that 2.5 weeks ago, there was a massive spike in the GDX options flow. And of course, within expectations, again, that led to a pullback in gold miners. So the bull thesis for gold miners a few weeks ago was very obvious. And many people would have seen this chart if you were on Twitter. I believe it's by this gentleman called Garrett Goggins. And he was basically just sharing that, gold miners are extremely undervalued relative to gold itself even. And because gold miners have generally underperformed in the past few years, whereas gold, of course, has made more and more all-time highs. So the bull thesis for gold miners is obvious. It's very cheap, but the pullback in recent weeks has been because things got a bit too overextended in the short term. So maybe we can move on to the next slide. All right. So this is a chart that looks at the trend for gold. Now, a lot of people, when they look at trend, they'll say, oh, where is the market in relation to the 200-day moving average? Or where is the market in relation to the 50-day moving average? So what I've done when I calculate the trend strength is I've looked at every single market in relation to 20 different moving averages. And then you kind of sum these up. So for example, is this market above the 5-day moving average? Is it above the 10 days? Is it above the 15, 20, 50, 150, 200, 250, 300 day? So that gives you a bit more of a general sense and a bit more accurate, I would say, sense of what is the trend in gold. And what you can see is that during the recent rally in gold over the past few weeks, gold, of course, was in an uptrend, which is good if you're a trend follower. But when a trend gets overextended, as it did a week ago, you tend to get a pullback or at least a consolidation. So next slide. All right, so we've got the pullback in gold. So the question is, what comes next, right? So if you're a trend follower and if you believe in the macro fundamentals, which is basically that central banks are buying, which is that these central banks, they need to diversify their reserves. The question is, now that we've got the pullback, what comes next? Will silver outperform gold in the next leg of the bull market? Because historically, for example, if you see in the 2000s bull market, or even in the 1970s bull market, silver tends to outperform gold. But thus far, that has not happened. And again, going back to the macroeconomic thesis, that's kind of obvious because central banks are buying gold, they are not buying silver. Now, historically, some countries have had from time to time a silver standard, but generally speaking, for most countries, for most of the world, for most of history, gold has been the main reserve currency. That's been the standard. So the question is, in the next leg of the bull market, are we going to have silver outperform? And that's entirely possible because if you see in the past 2 decades, quite often what happens is in the initial stages of a precious metals bull rally, gold might do well, or silver might not necessarily underperform, but it will perform similarly to gold. But then in the last couple of days or the last couple of weeks of that bull rally, that's when you will see silver start to spike. It'll have this massive catch-up movement because silver is a much smaller market than gold, and it takes a lot less inflows in order to cause that market to spike. So in this chart, it's showing you what is the short interest for SLV, which is a major silver ETF. And you can see 2 similar spikes in this history. So first, you see a spike back in 2011, and that was at the very peak of silver when silver hit $50. So that makes sense because, silver is surging, it's going up, and a lot of people are expecting it to come back down. So hence short interest spikes. But the second spike in short interest, which was in September 2022, that was at the exact bottom of silver, right? So right now you see a third spike in short interest. And the question is this spike at a market top or is it at a market bottom? Now, if you look at the chart, it's clearly not the same as 2011 because there has been no silver spike so far. So my guess is that in the next leg of this bull market, we are going to start seeing silver outperforming gold. So that's my segment for today.
No, that's perfect. And I think that's where I'm also at on it too. And I think Sam has the same kind of idea, which is we're kind of getting into this point where it's like a make or break point for the precious metals market. And could we see silver start to really catch up? And I think the answer is yes. I think across the board, it's yes. I think so many people are kind of writing it off. And they kind of talk about it in many ways. You know, one of them, central banks aren't buying silver. Central banks are doing this, they're doing that, but they're going to push the silver market up. And, you know, like, you know, markets are psychological. And not to mention, people do actually buy silver. People act like silver is just this dead metal, but people actually really do like silver. People
Exactly.
do buy it and they could get hyped on it. So, what is your feedback, Sam?
That was an awesome few slides there you went through. Just on the silver though, like just technically speaking, it makes a lot of sense. Like silver has resolved this. I don't know if you want to call this the handle of a massive cup and handle. Either way, it's resolved the base and it's just been churning around at that breakout level for over a year. So like if it's gonna get going, like now seems like the time. And then you bring up the short interest chart. That just seems like the cherry on top. That could be the catalyst to spark a fresh leg higher. So I love this. I didn't know the short interest was so extreme in the silver market.
Exactly. And it's been a massive spike upwards, because think about it, right? So what's happened is that because gold has gone up a lot in recent weeks, the bears are also trying to short silver because they think that silver and gold are going to go down together. But what if the bull market continues, right? Then you could get a pretty good squeeze higher. So, and that's generally speaking been a history of silver, which is that most people don't tend to pay attention to it. They tend to just look at gold. But towards the end of a bull market, you know, as you get towards, let's say, the final quarter or the final eighth of the bull rally, that's when the traders, they start looking at the charts and they say, oh, what hasn't gone up so far? Silver. So all this capital kind of just floods in. And like I was saying, because silver is a much smaller market than gold, it takes a lot less capital, less inflows to move silver as opposed to gold. So that's why silver tends to get these massive spikes. And in the end of a bull rally, you tend to see the gold silver ratio go down simply because silver is outperforming gold significantly.
For sure.
So,
And Jason and I have been talking about like a lot of the miners haven't really participated as well. So like I think that goes along with this increase in risk appetite theme that you're referring to. You know, people see that gold's making new all-time highs and they want to know what the catch-up trade is, and
Exactly.
silver's usually fills that spot. But it's not just that; it's a lot of these mining companies, particularly the small mining companies, the more speculative ones. Not
Exactly.
the wheat and precious metals have like already broken out. So
Exactly. Exactly. I mean, it's similar in the stock market, right? It's like when they say towards the end of a bull market, you start to see the pigs fly, right? Because
yep.
everything's gone up already. And then people are just looking across their screens. They're trying to see, oh, what hasn't gone up yet? Let's go buy a bit of that. And everyone's doing the same thing. So because they're all trying to see what hasn't gone up and that capital is all flowing into those few markets that haven't gone up, that's enough to push those last pigs, so to speak, much, much higher, So, yeah.
Yeah, I think that's the key here, and I think that's the next big trade, which is it probably will start with silver, then we'll probably run into, you know, the large cap miners. Yes, some of them moved, but the rest of them need to start to move as well, and then we'd start to see that really start to happen in the speculative spaces like silver miners, like platinum, and so on. So I think everything's hinging on silver right now, and I think to me it's a silver starts to break out again. I think that everything's going to follow it, and I think too many people just aren't ready for it. There, you know, I shared that chart the other day, which was the gold relative to the S&P 500. It's basically one of Sam's charts where I just added a Bollinger Band squeeze on it, and so looking at that, so many people looked at it and they were like, "Oh my gosh, you're so bullish on gold, it's crazy." And it's no, I don't know if I'm extremely bullish on gold, but I can say that normally when we start to see this outperformance in gold compared to the S&P 500, we do see that that's when we see silver start to move. That's when we start to see the other sectors in the United States that are underloved right now, like energy, materials, and so on. Those will start to move as well. And then technology starts to become an underperformer, and then gold and silver are also just trending. Gold doesn't have to continue its massive rally like it's had for the last couple of years. Gold could go sideways, and I think that would make the most sense. I think it makes a lot of sense to see gold just go sideways to up slowly here, and then silver start to be the outperformer once again.
Exactly. Very well said.
So, Sam, can you go back to slide 1?
Yes, I can.
So starting out with this, what do you think the dollar interest rates? Let's just talk high level macro right now. And so Cebu Trade, what are you thinking about the dollar and interest rates and how this plays into the gold story at the moment?
Well, I mean, a lot of people they ask, do you think a market's going to go up or down? But the first question I ask, even before that, which I think about, is do I think a market's going to be in a trending environment or a non-trending environment? So personally, I believe that the dollar is going to be, generally speaking, in a non-trending environment. It's just chopping up and down. I know that a lot of people they're thinking, bonds have done very poorly in the past couple of years. Are we going to have a massive bull market in bonds this year? And as of now, I don't know the answer to that question. And my best guess is I think it's going to continue to swing sideways as opposed to having a massive bull market in bonds. Of course, there are various factors that could change that. For example, if later in the year we see, a massive economic slowdown and then a massive decline in inflation, so perhaps that would, push yields lower significantly and then push bonds much higher. But as of now, we don't quite see that. I know some people say, there are some signs of economic weakening, which is true, but it's still not significant enough that it would really propel bonds into a massive bull market. So for the time being, I think that both bonds and currencies are generally going to be swing sideways as opposed to trending very strongly. So my outlook on the dollar, generally speaking, is that it's going to be flat, going up and down, which is great if you're a mean reversion trader. If you're a trend follower such as myself, you're not likely to get a very strong trend there. And same with bonds. It's very nice if you're a mean reversion trader in the bond market. And I've taken a couple of mean reversion trades. But the thing with all mean reversion trades, as opposed to trend following, is that you can't have a very large position size, because the underlying thesis to mean reversion is that as the market keeps moving against you, you have to keep increasing your position size, right? So that means that typically speaking, your position size is not large enough once the market starts to move in the direction that you do want it to move, which also means that your profit is not that high as a percent, so to speak. So the big money is in trends, and the smaller money is in mean reversion trades. So if you're like me, and if you don't see a particular opportunity for trends in the dollar and bonds, you're generally avoiding it unless you get an extreme from a mean reversion point of view. So we got that bounce in bonds, and we got that pullback in the dollar. And now my expectation going forward is just swinging up and down sideways, no particular trend.
Yeah, I mean that's something that so many people in markets kind of get too excited about, which is when we're looking at things, it's always got to be an up or down, and really, like a lot of the times, things are sideways. The prediction could be you could predict things a lot better if you just said, "Hey, this is probably going to go sideways because it's in a range."
Exactly.
And I think the dollar will probably hit the bottom of that range. I think it can, but that doesn't mean I think it's going to break out of that range anytime soon. I think we will get there at some point. I think the move in international equities is saying that we could go that direction. The move in gold, silver is saying that we could possibly go that direction, but we really need to see it break a clean level of 100 and start to actually close between 199, and then we could possibly see that weak dollar cycle kind of come into play. But for now, it's more of a continue to understand that sideways isn't bad for things like gold or silver either. Sideways isn't bad for the market either. I mean, for the last couple of years, the dollar's been sideways since 2022, basically, and the stock market has gone up in that environment. Gold and silver have done well in that environment. But down is really when we start to break that 99 level, that's when we really start to see the rest of the commodities come into play. And I think so. So my long term, if I was to predict, now trading, you can't predict. So there's no prediction in trading. But if I was just to think and speculate and put my best speculative hat on, I would say that the dollar breaking below 99 can happen possibly this at the end of this year coming into next year. I think that that's when that would happen.
I'm curious if you guys think there's any commodity complex that stands to benefit from a weaker dollar more than precious metals. Like gold loves a weaker dollar and lower bond yields. So are you guys thinking anything else could do better? Maybe grains? Would they like that more?
I think
Ooh.
that's, I think that's a bit of a guess. The answer is I don't know. And Jason, as you were saying earlier, I think a lot of times people like to throw out these big predictions. This is going to go up, that's going to go down. When in reality, a lot of times, I think the best answer and the most honest answer is to say I don't know. And I know it's not the smartest sounding answer. But the thing is, in trading, you only need to know one thing, right? If there's 10 different markets, you only need to know one thing. And actually, I wanted to add a bit of a comment to what you said, Jason, earlier. A lot of people, they think that when they look at correlations between markets, they're looking for this kind of one-to-one correlation where they're saying, if gold and silver, precious metals are supposed to go higher, well, we need to have the US dollar go lower. So now if you look at the historical charts, that's often not true. What you actually need is that for gold and silver to go higher, you only need the dollar to not go up. So as long as the dollar is either flat, and I'm not saying exactly flat, I'm saying swing sideways. So as long as the dollar swings sideways or down, that is enough for gold and silver to go much, much higher, right? But to answer Sam's point, I do think that precious metals are going to be the main beneficiary if the US dollar goes much, much lower, as Jason was alluding to earlier.
Yeah, I think it's very easy to see right now that the trade is still precious metals, but I also think that there's a bunch of interesting things coming into play if we kind of saw this cycle play out the way it did. The grains actually, which is kind of interesting, is when we get weaker yields and a weaker dollar, grains really like that type of environment. So we could see these massive moves in the grain space. However, once again, it's a take the signals as they come. The only one that's really fully long with a full position is corn. Soybeans is a half position at the moment. Wheat is a half position at the moment. But I do think these are kind of going to be an interesting place to position yourself going forward. But you got to take the signals as they come. Like we were talking about earlier, when things go sideways, we're just waiting for that breakout. That to me is how you really trade well. Is sit okay sideways in a dollar, great. Means precious metals could still do well. If you're a mean reversion trader, you could trade the range. Possibly as the dollar's heading bound to that 100 level, we will get a big move in silver and gold once again. But I think going forward, like, you just have to be okay. The commodity cycle, when everything's moving, because that's the thing that people don't understand about the commodities, which is the dollar is really what triggers that commodity bull market. And so if the dollar is moving lower heavily, we will see all of them start to move at some point. It will always kind of go in some order. There's a weird order if you basically go back and back test this. And Sam and I have been working on this a bit lately, which is you'll kind of see it starts in the precious metal space. 10 to 14 months later, you start to see it in other commodities starting to pick up. And then next thing you know, you see the grains start to just take off. And the last one that usually takes off is oil. And so, but we really need that dollar to continue a downtrend to see that big move. I mean, commodities don't tend to do very well. They can go up when the dollar goes up, but it's usually a panic thing.
That's exactly what we just saw, like back in 2020, 2021, 2022.
2008, 2008 is another one, where you kind of have this panic thing where people are panicking into commodities and then they're panicking into dollars. As you see those two big spikes on the dollar chart down there, that's where people kind of spiked into those commodities and dollars at the same time in 2008. then you get a crash. And when you see that environment, that's usually just a crash environment. You're going to see a market that's going to go into a bear market at some point. When you see the dollar ripping higher and commodities are ripping higher, at some point that market doesn't last. I've seen it many times. If you just back test that market regime, it always ends up in some form of trouble. So I don't want to see that right now either. I think a lot of people are like, well, the oil can go up with the dollar and like gold can go up with the dollar. Yes, this all can happen. Anything can happen. Nothing is off the table in markets. However, when you're looking at that type of environment, that's going to lead into turmoil, because that's basically saying costs for people are going a lot higher. Costs for globally are going higher for people because the dollar is moving up. So you got inflationary pressures, you got monetary pressures. This always ends into a very bad environment, which usually ends up in some sort of a market correction. So at the moment, I don't see that on the table. I just see the dollar chopping around, possibly going back into their range. And then I'll wait for it to really break below that 99 level. And then the rest of these commodities will probably follow.
Makes sense.
So, all right, guys, I think we covered everything we need to today. So if we want to hop here, Sam and I will be on the Gold Rush in a little bit today. So if you guys are Gold Rush clients, we'll see you guys in a little bit. That's at 12:30. You guys should see that video at some point today. And I want to thank Subbu. Where can people find you? I know you write a Substack channel. Can you let people know, where to find you, how to find your research?
Yeah, so if you want to take a look at my free blog posts, you can find that at subutrade.com. You can also follow me on Twitter or X at subutrade. So exactly as it's written on the channel.
Awesome.
You've been crushing it on the social media, Subbu.
Yeah,
I see you out there.
Thank you very much.
Yeah, we're really excited to have you on here. It's been fun getting to know you and just chatting markets with you, because you really know your stuff. And so I hope a lot of people got some great stuff out of this one today. I know you might be a little overloaded because we did one yesterday. Today, we've been trying to do a little bit more lives. So let us know what you think about that. Should we keep it to a once or twice a week format? Should we do more? Let me know. Let me know in the comments. All right, guys. We'll see you soon.
All right. Take care.